The end of the year is coming to a close, but it's not too late to optimize your taxes to keep more of your income. Janine Rogan runs us through her checklist of year-end tax tips to make sure you know what you can do now for a bigger tax refund in the spring. Welcome to the MapleMoney Show, the podcast that helps Canadians improve their personal finances to create lasting financial freedom. Smart Savings by our sponsor Wealthsimple is a better way to save. There are no fees on deposits and withdrawals, and they offer higher interest rates than the big banks. You can find out more about Wealthsimple and Smart Savings at maplemoney.com/wealthsimple. Now let's talk with Janine. Hi, Janine. Welcome to the Maple Money Show.
Thanks for having me, Tom.
So I wanted to have you on. You're sort of the tax expert for me, the one person I know that really knows their taxes. And we're getting close to the end of the year. So I figured you can kind of run us through some of the different ways we can take advantage of that before it's too late. So just to kick it off, did you want to sort of hop into sort of maybe the one thing that everyone might be able to benefit from?
Absolutely. As the end of the year approaches, one of the most important things to think about is how you're going to be able to claim all of those deductions around charities and political contributions. So those definitely have a time limit on them of December 31st. So I think it's important that people start maybe planning over the next couple of weeks to make those contributions if that's something that they're looking to do.
And it's a great time to do it. Everybody wants to give during the holidays. What about, is it still the case? I haven't looked at the numbers lately, but you get more money back for giving to a political party than you do for a charity, right?
Yes. In terms of percentage, you do to an extent. There is a limit on that, but I find most people don't end up hitting that when they give to political parties.
Fair enough. With the charities, now there's a case where you can kind of save them up over multiple years and sort of benefit more.
Yes, they are able to be carried forward for up to 5 years. So if you have charity contributions that you've given in previous years and you forgot to claim them on your tax return, you can definitely utilize those in the coming tax years. And if you're in a year, maybe 2018, you didn't earn a lot of money or you're already getting a refund, you might want to save those and roll them forward to years where you are earning more income in the year.
Okay, that sounds helpful because I personally want to get as much money back.
Of course, everyone does.
Yeah, every little gimmick we can take advantage of with
yes, every dollar counts for sure.
What's the next one you've got in mind?
I would tell people to start looking at what their income is going to be for the year. So maybe this is one that I guess doesn't have to be done right before December 31st, but understanding what you'll make up until December 31st is really important. So you can start to plan those RSP contributions in the new year. The deadline to contribute to your RSP for 2018 is March 1st of 2019. So it's important to start understanding if maybe you need to make a bigger contribution so that you can find yourself receiving money back from the government instead of owing.
Yeah, that's always been kind of the way I do it loosely is contribute sort of within my highest marginal tax rate and then TFSA next after that. So I like
Definitely.
I don't like to contribute into the next tax bracket. I normally stop.
For sure. And those are also things that you can roll forward. You don't have to claim all of the RSP contributions you're making in a year. You can carry them forward to a year where, again, you are earning higher income because that is definitely where you're going to see the most benefit is the higher tax bracket you're in, the more you're going to get back from that RSP contribution.
Sounds good. And speaking of carrying forward, how about the TFSA? What do we need to know for that?
So you have until the end of the year to contribute your $5,500 this year for 2018 if you were maxing out your contributions every year. And you will actually get $6,000 starting on January 1st to contribute for the 2019 calendar year. So if you plan on pulling money out of your TFSA, now would be the time to do so because you're going to get that contribution room back once the new year kicks in.
I've had this question a few times, and we might as well put it out there right now. Is a lot of people question that when you pull out a contribution, including any gains, that you do get the extra room back in the next year, right?
Correct. They only track what you pull out. So if you're in a loss position on an investment, it wouldn't be wise to pull that out because you'd only be able to contribute what you've pulled out. But if you're in a gain position and you pulled out everything in your TFSA, maybe it was $100,000 that you're sitting on in your TFSA, you would get to contribute that $100,000 back into that account.
Yeah, I've had that question a few times, and that's how I've answered it. So I'm glad I'm getting this right. But
yes, you are, definitely.
I've never really pulled out money out of my TFSA, so I can't say from personal experience. But
For sure.
I've had that question more often than I would expect. So it seems to be something that people aren't sure of. That yes, you actually can pull out your gains and use that again next year.
For sure.
That is the catch, though, right? That you have to wait till the next year. Like if you pull money out in July, you can't put it in August or something.
Correct. Yeah, I actually fell into that trap really early on when the TFSA first came out. So I think I ended up owing, I think it was $200 in interest charges and penalties, which was not fun at the time, but I mean, isn't very much now. So definitely something to be mindful of. Make sure you're waiting until that new calendar year to recontribute what you've pulled out.
I do remember that being very confusing the first year. I think
absolutely, yeah. I don't even know if the government knew.
Well, obviously, it was probably coming from there that was making it a little confusing because I remember that was quite a big story at the time. Was everybody
definitely
messing up this contribution? So, what other tax tips can we get into?
I think a really important one that people should focus on is taking a look at their capital gains and losses for the current calendar year in any unregistered account. So it's not going to matter for your RSP or your TFSA because those are tax sheltered. Mm-hmm. But if you are in a position where you're going to be realizing either gains or losses, you can use those against the gains or losses. So an example of this would be if you realized a gain in the current year and you were hoping to sell some shares of something that was going to be taking a loss, doing that before the end of the calendar year is going to be important so that you can net the two against each other and not owe as much from a capital gains tax perspective.
Okay, so you get the losses in by the end of the year just to kind of offset some of the gains you may have had throughout the year?
Yes, definitely. Or vice versa, right? If you realized a loss at any point during the year, you might consider selling something so that you can realize a gain offsetting the loss and still not really paying the tax on that.
Okay. Is there any other, specifically within investments, any other sort of tax things we can take advantage of?
So I think one to be mindful of is definitely taking a look at your investment portfolio around how certain things are going to be paying out interest or capital. When it comes to mutual funds, you don't really have a choice on some of that, but some of the investments you might be able to work with an investment manager to try and realize the most appropriate way of receiving that income or interest or additional mutual fund shares.
Okay, because it's all taxed differently, like
it is, yeah.
A dividend compared to a gain, and
yes, definitely. And that is something to take into account because they have different tax rates. So you'll want to make sure that you are planning for that and that you can utilize some of those appropriate tax measures around how you are earning that income.
Now, I know this has changed a lot. Different political parties come and go, and there's been a lot of taxes, especially around families, that have changed. Can you go into sort of what's currently available?
So currently there is some tax planning for families that they can use. I believe it's called the child tax credit right now. It has changed over the years, and we might be seeing another change coming up here in 2019 if the political parties do not stay the same. So, it's something to take a look at. It's usually more helpful for lower income families. So if that's something that is a situation that people find themselves in, I would definitely say to take a look at that. And usually it's pretty easy to file for when you are filing your tax returns, similar to how you would receive maybe like a carbon tax rebate or a GST rebate, both here provincially in Alberta and federally from the government.
Mm-hmm. This reminds me of something I've reminded people of in the past is the idea that as political parties change, all these rules can change easily.
Yes.
I've often said that with spousal RSPs, that people think like, oh, well, it doesn't matter if we have all RSPs in just one person's RSP because we can split it. But, well, maybe not like 30 years from now when you're retired.
It's true. And that's one thing I try and tell people when they're looking at, TFSA is we don't know how long this is going to be available as a tax-free vehicle. I mean, we're getting into the $60,000 of an individual being able to contribute tax-free. Who knows when the government's going to cap it or say you have to start paying taxes over a certain amount. So I think it's really important to utilize the fact that we have this time on our side and we have a vehicle that's going to allow us to save tax. Mm-hmm. So it may not be here, like you said, in 5, 10, 15 years. So it's important to use it now when it's available.
Yeah. Same with any of these tax credits, I guess.
Oh, absolutely. I mean, RESP, RSP, TFSA, everything. If you can take advantage of them, I realize that that's a lot of contributions if you have multiple kids, and both spouses have both of those RSPs and TFSAs. But if you can figure out a way to maximize them to the best of your ability, I would say do so while they're still here.
Yeah, an example, you brought up RESP here in Alberta, where we both are. When I first had my kids, we had the Alberta Centennial something or other. It was an extra Alberta grant that was part of the RESP, and I took advantage of it early. Now, if I had waited until they were 10 or older, which they aren't yet, it's not around anymore. So
yeah, exactly. So as soon as people hear about those grants that are available, definitely utilize them. And that's one of the reasons why it is so important to file your tax return and get your documents in order is some of these benefits people don't even know that they're able to realize and receive. So filing that return, as maybe painful as it can be, is important so that you can utilize those grants and rebates that you get from the government.
Yeah, I committed a personal finance sin. I was I was behind on paying my taxes. I
won't tell.
Just everyone listening. It was either last year or the year before. I can't remember, but because of that, we didn't get the child tax benefit right away. It had to wait until the taxes were filed. And
absolutely, they will hold that back if you are behind on your taxes.
Yeah. So anybody that's having concerns with getting money like that, then file the taxes. Even if you're not making an income, if you're
for sure so important
or something,
or a student, so that you can start to rack up those tuition credits. So important for when you're starting to actually earn money after college or university.
Yeah, I remember my dad used to always use my student expenses because I had no income in college at the first part of college, and he'd say, "Oh yeah, send me in all your expenses," because I guess he could take advantage of it at least at the time.
Yeah, I mean, parents can still take up to $5,000 of tuition credits from their children, barring the fact that those children use up all of the credits first if they did have an income. So if not, it can all be carried forward.
Yeah. So what's next on your list? Something someone can take advantage of?
I think this one's more maybe specifically for those people who are self-employed. Mm-hmm. But if you are filing a statement of self-employment income, or you run an online business such as a blog, or you have some side hustle income, now would be a great time to make sure you're getting in all those expenses for the year. So if you are looking at purchasing maybe some new equipment for your business, getting that in before the end of the year is going to really help reduce your tax bill for the current year, if this was something that you were going to purchase anyways.
Yeah. Don't add up expenses just to pay less tax.
No. I mean, that doesn't make sense from the standpoint of running a business. So, if you were going to buy a new camera, a new laptop, or some software for running a program or editing photos, I would say definitely try and get yourself sorted and get those in by the end of the year so that you can look at where you're going to stand from a business perspective and if there's anything you can do to lower your taxes.
Yeah, and then it's just a nice time to be planning for the new year anyway. Like say you are a photographer or something, you want to buy a new camera like that can help set up what you're planning to do in the new year.
And you can take advantage of Black Friday sales and
Exactly.
Boxing Day and all of those good things. I feel like everything's on sale from Black Friday now until the new year. So
yeah, Black Friday's not a day anymore.
No, it's like a month. Black Friday month, yeah.
Is there anything else within the business side, or is it pretty much just getting those expenses in?
Definitely getting those expenses in. And if you are incorporated, it would be a great time to look at whether or not you want to pay yourself a salary or a dividend for the year. And that's going to be based on, what your tax rate is, what you need to survive on, and if you're earning income from any other sources, and really if you need contribution room for your RSP or CPP in the future. Those are all going to be things that you want to be looking at in the current calendar year before deciding whether or not you kind of go to that salary or the dividend route.
Mm-hmm. If we can just hop back here, I mentioned at one point I mentioned, what am I trying to say here? Spouses that maybe don't have an income. What do they do tax-wise? They still fill out a tax return though, right?
Correct. Yeah. Legally, I don't believe that you have to file a tax return if you don't owe, but of course it's always a good idea to do so. Like I said, so you can get those credits and reimbursements as well. There might be opportunity to claim a spousal credit if your spouse is not earning any income on the higher income earning spouse. And as you get into retirement, there may be opportunity to do pension splitting, or if they actually do work for your business, there's obviously the opportunity to pay them for the work that you're doing and kind of split some of the wages that your corporation is going to earn that way. So it is really important, even if you don't have an income and maybe you're a stay-at-home spouse, that you are filing a tax return.
Yeah, it seems to make sense. Does that still affect... I think at one point filing your tax return was connected to making sure you're registered to vote as well, too.
I'm not sure on that one.
I think you can go out and make sure you're registered anyway. They always want you to check. But I think one of the things was that tax return where they can kind of...
I'm sure you're in the system to vote based on your tax return. And then, like you said, if you didn't file a tax return, it's not like you can't vote then. But that's definitely something that people should be looking at, especially since they're probably going to be calling an election next year federally and maybe provincially too here in Alberta. So filing that tax return is going to maybe make it easier for you come time to vote.
Yeah, for sure. Anything else on your mind that people can take advantage of?
I'm starting to run out of ideas when it comes to tax tips here for the end of the year. But I would really just say kind of starting to take that holistic view of what the situation you're going to be in for 2018. No one likes surprises. And so, utilizing a simple tax, a great online program that's really easy to use just to have a guesstimate of your taxes for the year. And, if you aren't really sure what boxes are going to show up on your T4, you can always go to your last pay statement of the year and kind of look at that year-to-date gross number and plug those numbers into simple tax, and it'll give you a rough idea if you're going to owe or not. And if you are going to owe, now would also be the time to start planning for that tax bill, because no one wants to be surprised with that 5-6 figure tax bill come April 30th. And
this is a good point too to bring up. I'm kind of anti-tax refund. I
agree. I think everyone should be sad if they get a tax refund.
Yeah, we're basically loaning the government money, and we don't
for free. And you can get 3% with EQ Bank. So what are we doing?
There's a form you can fill out to have less tax taken off your paycheck, right?
Yes, the TD1 can be filled out, I think up to every year if you wanted it to, and it's gonna, say maybe I'm gonna contribute to my RSP, or I have childcare expenses, so please don't tax me as much, so that I am not getting a refund. I know people love getting those $5,000 refunds because they think it's for savings, or they can use that to pay down debt or go on a wicked vacation. But at the end of the day, like you said, it is the government holding on to your money for for the entire year. Whereas if you do owe, it's kind of like the opposite. You've held on to that money that the government needed for free, no interest, and you just have to make sure that you're able to pay it at the end of the year. That being said, though, if you do owe more than $3,000, they could require you to start paying by installment.
Mm-hmm.
So that's something to keep in mind. So I always try to say, if you're going to owe, try and owe less than $3,000.
Yeah. And you got to know what kind of person you are too. If you're going to fill out a form like that, and then you're going to just kind of blow the money every 2 weeks.
100%. Yeah. If you can't save every month for your taxes, definitely have them take off as much as possible. But if you are someone who is committed to saving every month, what my husband and I do, because we always end up owing just with side hustles and self-employment income, is we put away whatever percentage we've calculated into either a short-term GIC or a high-interest savings account, and then we're actually earning a bit of money on that tax that we owe the government.
Yeah, like a simple thing is if you fill out the form that you get less taken off your paycheck, take that exact amount, and then you could start putting it away as a
absolutely. Yeah. So then you're not really able to see it and spend it.
Yeah. Now, if you do end up with a tax refund, one of the things I've always sort of suggested to people as a easy way without knowing the whole financial situation is that you can kind of put that into the RSP and improve your refund
tax.
The next time. Yeah.
For sure. It's a cyclical thing. If you get a tax refund, you can stick it in your RSP and get more of a refund the next year. And it just kind of is cyclical in that way. That's a great way to definitely look at it.
Yeah, and much better than blowing it on the big vacation. That's not a good
Totally.
idea.
I mean, vacations are fun for sure, but that's money, I guess, that you could have been using to pay down debt and pay less interest or invest for your future. You could have had that money sooner. So there is a time value of money thing that I think people need to think about. If you're waiting until the following April, so April 2019, to get money back that you could have had in your pocket in January, you're now looking at, 14, 15 months of not earning any income and not earning any returns on that amount. So that's definitely something to take into account.
Yeah, for sure. It's I do prefer the idea that of saving every 2 weeks when you get your paycheck, and then
absolutely. I tell people they should be happy if they owe the government money, and I get weird looks, but I think at the end of the day, it's better to have that money in your savings account than in the government's.
Yeah, I've heard people say the same thing to me. It's like I had to pay the government taxes. Like, well, we all pay the government taxes.
Of course, yeah. No, I'm not saying the taxes are horrible. We definitely need taxes. They serve a huge need in our society, and that's a whole other podcast. We could go into for like an hour and a half. But I guess minimizing what you owe, because no one wants to pay more than their fair share.
Exactly.
And making sure that you're getting the most value out of it.
Yeah, there's certain tax rules, and we should pay exactly what we owe and no more.
Absolutely. And that's, another really good point as to why you should file your tax return is, what if you were owed a refund? If you don't file, you're never going to see that money again. And that's something so simple.
That's a good point. I had someone at work a few years ago. They said they hadn't paid their taxes for 7 years.
Oh my gosh.
I'm surprised they weren't being hunted down, but also it's just surprising because chances are they did have a refund. It seems to happen
at some point, probably.
Yeah, like it seems, at least in my experience, anyone I've talked to is companies will normally take more tax off.
Overtax, yeah, and or they'll tax the amount as if you had no other deductions or credits to take. So, if you bought a home, the home buyer's credit, or if you contributed ever to your RSP, or you have childcare expenses, like those are all things that are going to lower your tax bill and drive a refund. And so if you have never ever filed your taxes in 7 years and your company has been taking off the max amount because they don't want to find themselves in a position where they're getting penalized by the CRA, then you're probably owed a refund, and you can definitely go back and file those returns. Again, might be a little bit of work, but there are a lot of online programs, again, that can help you do that.
I believe she actually got this cleaned up. This was, last I talked to this person, was at least 5 years ago.
Hopefully they did.
Hopefully they haven't gone to 12 years now.
Jeez.
Well, anyways, thanks for being on. This has been great, just to give people a bunch of ideas on what they can do with taxes. I really like the recommendation of Simple Tax. I think that's the best software out right now, that it's not going to cost you anything, and it's
Absolutely.
handy and online.
And it's so minimalistic and sleek. There's not a ton of things like popping up in your face, which I think can be overwhelming if you don't maybe know what you're doing for the first time filing your taxes online.
Yeah, for sure. Can you let people know where they can find you?
Absolutely. So you can check me out on my website, JanineRogan.com, as well. I'm on Twitter, Facebook, Instagram, and my YouTube channel, which is just Janine Rogan.
Great. Thanks for being on the show.
Thanks for having me.
Thanks to Janine for coming on the show and making sure we don't pay more tax than we owe. You can find show notes for this episode at MapleMoney.com/Janine Rogan. As always, the best way to support this show is to help spread the word. Reviews in iTunes, social sharing, or simply telling a friend can help this show continue to grow. Thanks to you for listening each week. We have a lot of great guests lined up into the new year who I'm sure you'll learn a lot of great tips from that you can apply to your own personal finances.